From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 6, 2018. Today, we're going to take a look at the GBPUSD Great British Pound versus the US dollar. Starting here on the daily time frame, we can see that this currency pair, overall, in the past several weeks, we've seen a bearish trend pattern along the black trend line. What that means is we've seen falling highs. Look at this, 1, 2, 3, 4 highs, falling pattern going down here. What's interesting about today is we're coming up to challenge the underneath side of that trend line again. That means that the potential of resistance and reversal to go back down increases the closer we get to that trend line. And really at this point, the yellow shaded area that we see here on the chart into the mid 1.39. So following that falling pattern, we're looking for resistance and a potential that it goes back down. Not a guarantee, but a potential that it goes back down. We bottomed out down here into 137.30.65, the green shaded area. If it would have been able to break there, I think we would have easily seen it down towards the 136 level, where the 100 period moving average is and the longer term blue trend line that you see down here. But it was unable to do that, now bouncing back up. Zooming in a little bit here on the daily, I've done something else. I've taken Fibonacci from 3 different ranges. I've taken it from the highest high to the current low. And when I say the current low, I mean this low just about 4 days ago. So highest high to the current low. I've also taken it from the mid high, right here in the middle of the black trend line, down to that same low, and the last high, this one right here, down to the lowest low. So taking all 3 of those Fibonacci ranges, we can see some overlap of Fibonacci right here into this yellow zone, the low 139. So we have Fibonacci present here. We have the bearish trend line present here. We go back in time a little bit, we could see where the black circle is. There's multiple days finding support here. So we know that historical support can help us identify potential future resistance, and that's where we are, 1.3905, 1.3940, the yellow zone. So we have Fibonacci, historical support, the trend line lining up here at this yellow zone. Not only that, we see resistance, black box, and even a little bit further to the left, and I'll put another circle back here on the left. You can see some resistance into that yellow zone back here. So we know that historically this is a decision point for the market, resistance and support, buying, selling, entering and exiting. We know there's Fibonacci here. We know there is the bearish trend pattern. We're just seeing a little bit of retracement of that bearish trend pattern today. So the real, expectation here is resistance. And if it continues to go up, we would expect to see a break of that resistance. If it doesn't, we look for signs of resistance and reversal. Let's take it on down to the 4-hour time frame. So here we are coming up into that zone. We know where all these tools, indicators come from, price action indicators. We know that there's the potential for resistance, but there's no evidence of reversal yet. We see this larger blue candle coming up today into that yellow shaded area. So what we're going to do is look for some clue of resistance and reversal and the potential for it to go back down. We'll also watch for the opposite side, a break above here. We'd also look for a challenge to the next resistance, which happens to be the orange shaded area up here into 139.95, 14,020. That's the orange zone. So we know that if it gets above this resistance yellow zone, it goes to the orange zone. And that's historically accurate if you look back here just above the circle. And again, the other side of this is that we do find resistance here inside or just underneath 139.40, and it begins that turn back down in the direction of what has been the trend for the past several weeks. And again, back under the blue zone, the green zone. Under the green zone, we know there's a significant fall likely down to 136 again. So we know that this yellow zone is the area that we want to pay attention to. 2 things I'll look for. A breakout above the yellow zone could indicate a continuation higher towards the orange zone or higher. So a breakout above this resistance goes higher. Or some sudden reversal, a bearish candle, leaving a long wick on the top of a small body, bearish engulfing, something like that, that tells us that there's going to be resistance and potential infusion of sell orders. So watching for an infusion of sell orders from this yellow zone or a breakout above it could be our next move here for the pound dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.